Hey guys, what's up? My name is Spenny, and in today's video I want to cover Arkk Invest. So Arkk Invest has several different ETFs you can invest in, and in my opinion they're probably the best high growth ETF that you can really trust your money with. And so in today's video I'm going to be explaining what Arkk is and why I trust Arkk with my own money, and I dollar cost average into them every month, and I have no plans to stop doing that for a very long time. So by the end of this video you should understand exactly why. Okay, so before I start talking about Arkk and what their investment philosophy is and all that good stuff, first let's just briefly cover what an ETF is for those of you who don't know what it is. So ETF stands for an exchange traded fund. An investment fund that lets you buy a large basket of individual stocks or government and corporate bonds in one purchase. Think of ETFs as investment wrappers, like a tortilla that holds together the component ingredients of a burrito. And instead of tomatoes and rice and lettuce and cheese, these burritos were filled with stocks and bonds and are considerably less delicious to eat with salsa. Okay, so that's probably the most confusing explanation I've ever seen. So let me explain what an ETF is in more simple terms than comparing it to a burrito. What an ETF is, essentially, you take your money and you give it to a portfolio manager. So in Ark's case, that's Cathie Wood. You're giving her your money, and then she takes your money and she distributes it into various stocks of her choice. So the reason why this is attractive, because it takes no research or time on your part. Arkk and their investment team does all the research, all of the trading, and everything. You just give them your money, they do the rest. So it's a really simple way to invest and a great way to diversify. So another really key component you need to understand with ETFs is that there's actively managed ETFs and index ETFs. The difference is, with an actively managed ETF, the fund manager is constantly trading the stocks within that portfolio. So they're selling and buying stocks on a regular basis, nearly every day. In Ark's case, that's every day. Where with an index ETF, it follows something like the S&P 500, where there's very minimal trading, unless a certain company gets pushed out of the S&P 500 or one gets added to it, for example. So with the index ETFs, they typically have a lower fund fee than an actively managed ETF, and I'll cover what those fees exactly are later in this video. But just note that Arkk is mainly known for their actively managed ETFs. There's 5 of them, and there's 2 index ETFs. I'm going to be covering 2 of their actively managed ETFs that I'm personally both invested in this video. Okay, so when you're choosing an ETF to invest in, you got to kind of make the decision, do you want it to be an actively managed ETF or an index ETF? With managed, there's more potential to make money, but there's more potential to lose money as well. So you really got to trust the fund manager. I really trust Cathie Wood, and I'm going to explain later in this video why I trust her. But let's take a look at a really popular index ETF that you could also invest in if you want a more safer choice. So one of the most popular ETFs is SPY. It tracks the S&P 500. This is not an actively managed ETF. The portfolio manager just has the 500 companies from the S&P 500 in the fund, and then he only trades when either one of the companies gets kicked out of the S&P 500 or one gets added into it. So it'll have a smaller fee than an actively managed one, but a lot less potential as well. Like you can see here, the SPY has had a 7% return year to date, where if you look at a lot of the Arkk ETF funds, they have nearly 80 to 100% returns year to date. Of course, that's not typical of Arkk. It's usually far less than that, but given the whole health crisis and everything, it's really accelerated technology, what Arkk focuses on. Nonetheless, I do think SPY is a great alternative to Arkk if you're looking for an ETF. Okay, so if you want to invest into Arkk, all you do is type in Arkk ETF on Google, and then you go to ark-funds.com, and it brings you to this page here. Now, when you get to this page, you're going to have a choice of 5 actively managed ETFs right here, and then down below are their 2 index ETFs. These ones aren't so popular, so I'm going to be covering a couple of the actively managed ones. So I'm invested in Arkk and Arkw myself. I have somewhere around $13,000 invested between these 2. So I'm going to explain why I like Arkk and Arkw the best out of these 5 ETFs. Okay, so let's take a look what Arkk does, specifically Arkk, what they focus on. Arkk include those that rely or benefit from the development of new products or services, technological improvements, and advancements in scientific research relating to the areas of DNA technologies, which is the genomic revolution, industrial innovation in energy, automation and manufacturing, the increased use of shared technology infrastructure and services, and technologies that make financial services more efficient. So Arkk is more generic and broad than the other 4 ETFs. The other ones are more focused on certain sectors, such as fintech, the next generation of internet, genomic revolution, and industrial innovation. Whereas Arkk, you're getting a little bit of exposure to all of those sectors. So that's why I think if you're gonna invest in Arkk, you kind of got to have Arkk because you get exposure to a little bit of everything, and it's kind of the safer choice in my opinion. Because you're not fully exposed to one area of innovation and disruption, you have a little bit of everything. And Arkk is by far their biggest fund. It says here they have $4.8 billion under management. I think that number is more now. This hasn't updated in a few months. So with Arkk though, there is an expense ratio of 0.75%. So it's less than 1% annually. So if you invest $100, you got to pay $1 every year. So it's really not bad considering how much research Arkk does for you. And yeah, it's just very minimal effort on your part for that 0.75%. And we can see here that this is their total return back from 2015 when they were at about $20 a share. Now they're up in the 90s. And just this past year, you can see they were at 58, they dipped down to 37, climbed up to 95. So they've had a phenomenal year. Since inception, they've averaged about 26% return annually, which is amazing because something like SPY, which I mentioned earlier that tracks the S&P 500, usually averages around 10% a year. So Arkk has been outperforming SPY by quite a bit. And so let's quickly look at what their top 10 holdings are in Arkk. It's by far Tesla at 10%, Invite Corp at 9, Square 6, Roku 5. You can go down the list, but it's a bit of everything. You can see with their top 10 holdings that it's quite diverse and it's disrupting many different industries. And that's what I like about Arkk. You're not just exposed to one area of disruption. And so my second favorite ETF of theirs is Arkw. It's smaller, has $1.3 billion under management. And I'm not gonna read the fund description and objective. You guys can screenshot this if you want and read through it. But as the title sounds, it's focusing on the Internet of Things. So the future of the internet and where it's going. And in my opinion, the internet has only been around for like 20 years. It's really in its early days. And it's almost impossible to keep up with how fast the internet is changing and just new companies that are coming public. So it's really nice just having Arkk doing all that research for me and staying up to date with it. But you can see their focuses in this ETF is cloud computing and cybersecurity, e-commerce, big data and artificial intelligence, mobile technology and Internet of Things, social platforms, and blockchain. Blockchain is essentially Bitcoin. And actually, I really do like the exposure of Bitcoin you get in this fund that I'll quickly show you guys on that as well. Their expense ratio is 0.76%, so 0.1% more than Arkk, but that's essentially nothing. And they've actually had a better performance than Arkk since inception at 32%. But of course, past performance doesn't guarantee future returns. So yes, it's nice to see that, but it's no guarantee they're going to continue to outperform Arkk. If you are going to invest in Arkk, I mean, in my opinion, you should pick maybe a couple of their ETFs. But if you just pick one, I gotta say you should really be looking at Arkk since they get a broad exposure to a little bit of all of the different areas. So you can see here with Arkw, their top 10 holdings is a little bit different, but still some of the same companies. Tesla is 10% as well with Arkw, and they also have Roku. But then you got Square, Facebook, Pinterest, Sea Limited, Spotify. So yeah, you can see that it's slightly different holdings, but still some of the same stuff. So I did say that I'd quickly show you how they're exposed to Bitcoin. And if you guys want a video on Bitcoin, I've been researching them a ton lately, and I think Bitcoin could really pop off over this next year. So I do want to do a video on them. But yeah, comment down below if you guys would be interested in seeing a video on Bitcoin. I've been doing a lot of research in Bitcoin lately, and the more I research them, the more bullish I become in Bitcoin. And so I think it would provide a lot of value to you guys, but I need to know kind of if you're interested in that. So yeah, drop a comment down below if you'd like to see that kind of video. But anyways, so Arkw exposure to Bitcoin is actually number 24 here, Grayscale Bitcoin Trust. And that's 1.70% of their holdings. So essentially Grayscale Bitcoin Trust, it's kind of like an ETF, but for Bitcoin. So yeah, you're getting a small 1.7% exposure to Bitcoin by investing in Arkw, which is kind of really nice. It hedges against, potential future inflation. And like I said, I'm pretty bullish on Bitcoin. There's a lot of big time investors saying Bitcoin could hit $100,000 by the end of 2021. I'm not going to cover too much of that in this video. It's not a Bitcoin video, but if you guys want to hear more about that, comment down below, let me know. So yeah, those are the two ETFs that I'm invested in, but really any of them are all good. Like the fintech one is also amazing, but I have direct exposure to different fintech companies already, so I don't really want any more exposure. But just for myself, it's hard to follow the internet. It's moving so fast, so I just rather give Arkk my money. But before you decide to invest in an actively managed ETF, you need to know who the fund manager is. and why you should trust them with your money. So the fund manager for Arkk is Cathie Wood. She has a really good proven track record, and so we're going to cover a couple of her predictions. The first prediction I want to cover is on Tesla. So I'm going to play this clip for you guys so you can hear it for yourself.
In the commercial break, we were mentioning that there's a Tesla now in space.
Yes.
You like Tesla?
Love Tesla. It's one of our largest holdings, largest in our overall fund. We think that if Elon Musk, SpaceX, can do what they did yesterday in space,
right,
they're going to be able to produce the Model 3.
But they're different companies. It's a whole different business.
Same brain trust.
Do you think, by the way, do you eventually want Tesla?
Science.
Do you eventually want Tesla and SpaceX to merge?
No, I kind of like things the way they are right now. I like the focus. I like the focus.
But in the Tesla story, and we also keep looking at that stock with one big question. If it walks and talks like a car, it must be a car. And so it has 4 wheels, it drives around. All cars will be automated with AI eventually, GM will. Everybody else trades at a 15 to 16 multiple. They trade as if every car is being shot to the sun at some stratospheric number. Yeah. Which happens first? All GM goes to a 300 PE, or Tesla goes back to 16? Because one of those two has to happen.
No.
Explain that part.
GM is a call option on the future. The future is electric. GM's not electric yet, right? It's the internal combustion engine all the way. The future is transportation as a service, software as a service. You need software engineers for that. GM has great engineers, but they're hardware engineers. They had to go buy Cruise Automation to get those software engineers in Silicon Valley. Then you've got so you've got 2 big model changes: electric, software as a service, gross margins going from 20 to 25, which is the hardware model, to 85, 90%, which is the software as a service model. Completely different DNA. This is where Tesla is going. There's a third problem GM has. It's called distribution. By law, in many states, auto companies cannot do over-the-air updates. Tesla has been doing that regularly. It updates, it improves performance, it corrects mistakes, flaws. GM cannot do that and is really going to have to go maybe through Cruise Automation and rebuild a company, right? And even if they were allowed to do it by law, how do most dealerships get their profits? It's service. What are these? Is GM going to alienate its dealers? I don't think so.
So yeah, there's just a quick clip of Cathie Wood sitting down with Kevin O'Leary and other people that have been investing in the stock market for decades, and they had no idea what she was talking about. You could clearly see it on their facial expressions. And that's not the only call that Cathie Wood has made that has been extremely profitable. She also predicted Bitcoin to explode back in 2015. So let's take a look at that. So she states here, Bitcoin is so much bigger an idea than even Apple, which is a pretty big idea. Wood said her fund can't own cryptocurrency directly, so it bought shares of Bitcoin Investment Trust, and that's the investment trust that I showed you guys earlier from Arkw. And this was when Bitcoin was trading below 250. So she was calling Bitcoin when it was below 250 back in 2015. And now you probably don't need any introduction of what happened after 2015, but you can see here today in Canadian dollars, not American, that is trading at 14,115. So yeah, it's really taken off. These are some of the best predictions she's made, but she's been right also on Square. She was predicting Square back when it was trading, I think, below $50, saying it's just going to blow up and disrupt the financial industry. And now Square is trading at $170. So Cathie Wood has a really good track record, and she lays out all her research for the public. So she explains why she's bullish on a certain company, and it always makes sense to me. Okay, so I have a few reasons as to why I invest with Arkk. One, I just think it's a great way to get exposure to lots of companies. Each of their ETFs have about 50 companies in the portfolio. So you're getting lots of exposure. And for the reasons I showed you before and many other reasons, I just trust Cathie Wood and her analyst team. I think that they really have a good grasp of the future and the direction that technology is going. So I trust that they know when to buy and when to sell these companies. And it would just be almost feasibly impossible for me to keep up with all these companies. The internet and these different technologies are just changing so fast, so it'd be way too time consuming for myself to do. So yeah, I still invest in lots of different individual stocks myself, but also have 2 different Arkk ETF funds to diversify, and it's in an area where I think that they have a better grasp in than myself. So if you do decide to invest in Arkk, I don't suggest doing it for the short term. It's just better, in my opinion, to do it for the long term and dollar cost average into it every month, meaning that every month or every paycheck, you just throw a little bit of it into the ETF and you don't worry about it. In 10 to 20 years from now, when you decide to pull that money out, it should be way higher than where it is today. Okay, so that's all I have for this video. If you guys liked it and got any value of it, please drop a like on it. It really helps out the channel. And subscribe if you like this kind of content. I'm always researching new companies that I think is going to provide value to you guys. And I give my honest opinion on any company that I do research. And yeah, I hope you guys enjoyed this video. If you're invested into Arkk or thinking about it, comment down below and let me know your thoughts on them. I'll see you guys in the next video.